All righty. Looks like we are live. So we'll wait a few seconds for some people to join. Got a couple. Welcome.
Welcome, guys. Glad to have you here. We'll get started in just a moment. But if you guys have any questions that you guys want to get asked in AMA, feel free to already start dropping them in the live chat and stuff, and we'll hopefully get to them here in just a couple minutes.
Yep. All righty, guys. Well, let's go ahead and get started. My name is Hope Anderson, formerly Szymanski as of a couple weeks ago. Excuse me. And I am joined here with Nicholas Merten, founder and CEO of Digifox, and the founder also of DataDash, one of the largest cryptocurrency YouTube channels in the world. We also have a new team member here, Eugene Fernandez. He is our social media manager. So he joined us here today for this webinar. And again, I am the COO and head of client success. But Nick is going to be going through a little bit, just a really quick intro again on get paid in crypto. And then we will just dive right into the questions. So without further ado, I'll let Nick take it away.
Well, I wanted to start by saying congrats to Hope on the transition to Hope Anderson. That's very good news. And also to Eugene, we've really enjoyed having Eugene on the team. So we want to welcome him on board as part of the Digifox family. And yeah, we're really happy to be doing this, guys. It's been a little while since we've done an AMA or a webinar. So it feels good to have more faces here on the call and also have a really good set of questions. We got a ton of messages coming from Intercom, from social media, from people who replied or DMs. And we're really excited to go over some of them. I'll even dive into doing a bit of a screen share if it involves anything related to the market and how I analyze things. So I think it's going to be a great time, and maybe we want to have some good discussion between us guys. I'm interested to maybe hear your take on a couple things.
Awesome. So I don't know, Eugene, if you want to kick it off with one of our questions that was submitted, we'll just go ahead and get started there.
Sure. Thanks, Hope. So Nick, the first question for you is, what are the best strategies to accumulate crypto in a bear or a neutral market? So for example, DCA, staking, etc.
That's a great question. Yeah, I think it's really like a fitting question overall when we're thinking about get paid in crypto coming out soon. So I've been doing a lot of due diligence in regards to analyzing, generally dollar cost averaging as a strategy, and also the different kind of states of the market. One thing I could actually do, I could dive into the screen here real quick. I'll just open up the chart. We can talk about this. So as you guys can see my screen here, good. It's looking all good. All right, cool. So what we'll do is we'll actually kind of just dive in here to the overall video. So the major thing that I want to talk about when kind of attacking this question, the idea here of like dollar cost averaging or other different types of strategies during neutral or bear markets. So I think there are two different types of questions. If you're in the middle of a cycle in this case, right, there's really no such thing as per se a neutral market in this case. You do have kind of sideways segments within a bull market, but I usually look at things as either it's in a bull market or in a bear market. And I identify that by looking at, generally the 80% corrections. These are usually your typical bear markets from top to bottom. We can see here if we analyze on the chart, we use on TradingView, this is the tool I'm using. I'm using the date and price range tool. So we can take a look at the top here from the previous cycle in December 2017. down here towards the bottom. And what you'll see here, that's similar to practically all other corrections. We could take the one back here in December 2013 here to January 15th, right? We get a draw down here, 86.92%. So I think conservatively, if we're seeing a slight decrease in the amount of decline for each of these cycles, generally speaking, 80% is your kind of target from whenever you set in that cycle top. And it usually ends, and is quite visible in this case, by a very euphoric parabolic rally. So you can see this here, and going into the fall and winter 2017, a big breakout here, right? Followed by a dragged on bear market. So when we get when we get as far away as possible from these highs in this case, I'd want to generally dollar cost average more, right? So this is something we're actually exploring at Digifox, is how can we actually maybe do dollar cost averaging in a smarter way? But overall, what I would do during these time periods is, as markets get closer and closer towards a 60, 70, 80% decline from the previous all-time highs, doesn't matter if someone wants to say we're in a bull or bear market, but the further away you get from those all-time highs in price, you want to more heavily dollar cost average. Normal dollar cost averaging is great. It's one of the best winning strategies. You're going to beat the market out 80-something% of the time across all other types of investors, which is how amazing dollar cost averaging is. But if you could start to average in more heavily, or maybe receive a larger portion of your paycheck in the form of crypto as we go through these declines, that's something that can start to make dollar cost averaging even more powerful. And as you're working your way up and stuff, just do normal DCA. After you've had that 80% correction, it's not really worth adding too much complexity, and just averaging into the market over time. If you can mitigate in this case, and save up cash in this case, and start averaging at those big discounts, and not increase the weight of your overall portfolio with positions at the higher end of the market, that'll go a long way. So that's one way you can start to do it. And I would say as well, of course, it's always up to people's risk tolerance, or what they feel comfortable with. Some people are very big with self-custody and having their own wallet. But on the other end, if you're okay with utilizing a savings provider like Celsius, which we natively integrate into Digifox, the savings account, right? We can start to earn yield on your assets. Then in that case, that's a great way to start earning yield. So while you're waiting, for that opportunity to really start building in positions, the rest of your crypto can start to earn interest, and it will mitigate some of the downturn from the market, seeing as you're sticking to that idea of just averaging in the market over time. So those are a couple of things that I would promote as like some potential strategies to consider. But to each their own. You'll have to decide if it's the right set of solutions for you guys. But basically, to wrap it all up and put a bow on top of it, averaging in heavier into the market when we get major discount opportunities, and holding off during bear markets. And then outside of that as well, going on to earn yield on your existing crypto assets that you already purchased. So
awesome. Okay. When are you going to add seed phrases to Digifox?
So it's a great question. In regards to seed phrases for Digifox, this is something that it's a bit ironic, because originally we had worked on creating smart wallets in this case that allow users to obfuscate seed phrases. Generally speaking, on a user experience perspective, it's one of the big setbacks for the crypto space. Nonetheless, overall, through what we were doing with smart wallets, even though there are a lot of added benefits, in this case, we want to give users the ability to be able to have seed phrase wallets. I'm very comfortable with using seed phrase wallets, and a lot of other people in crypto are pretty common with them. So we are planning to add this with the launch of Get Paid in Crypto. It's going to allow you to not only have a Celsius account where your conversion of your paycheck can go into, but you can also convert a portion of your paycheck into seed phrase wallets. So we offer both options. We're very big on offering users the ability to maximize yield and returns, but at the same time, if they want to have self-custody and not have to trust anyone, in this case, you can have seed phrase wallets that Digifox doesn't have access to, no one else has access to other than yourself. So we'll be launching that when we launch GPIC, which I won't mention any dates yet. We're a big believer as a company of when it's ready, and we'll let you guys know soon when it's going to drop. But if you guys are interested, you can join the waitlist in that case if you wanted to receive your income into a seed phrase wallet.
Perfect. What's the difference between fees when you use a smart contract wallet, when I use my smart contract wallet, versus using your future seed phrase wallet?
That's a great question, dude. So that's something to consider with seed phrase wallets is that whereas with smart contract wallets, one of the great things is it allows us to utilize meta transactions. So simply put, not only do you obfuscate the need to remember your seed phrase or write it down, but also we can utilize meta transactions, which will broadcast your signed transaction onto the network. So I'll take a step back to explain it. Whereas traditionally with smart wallets in this case, or Digifox Pro accounts, you would just simply need to have some crypto from one of our supported tokens. It could be your Ethereum tokens or coins. It could be ERC20 tokens like Basic Attention Token or Chainlink. It could also be as well another form of stablecoin or another altcoin, right? Either way, you could utilize any cryptocurrency to pay down those gas fees with a Digifox Pro account. Unfortunately, though, with seed phrase wallets, you have to have Ethereum within your account to pay for the network fees. Right. So a little bit of a convenience pullback in this case, but it's again a mere option we want to offer to users in this case with seed phrase wallets. And we are working for those who don't have a smart wallet, in this case, or a Digifox Pro account. We're looking to reintroduce them at a later date on layer 2. So network fees will be dramatically reduced for sending and swaps, all types of activities. So that's the general kind of gist on where we are with the seed phrase wallets. You'll have to have ETH loaded into your account, similar to how you need Bitcoin or BTC for network fees for Bitcoin transactions.
Gotcha. Okay. What's the best way to avoid paying taxes when you're converting or selling crypto?
Yeah, it's a good point. So overall, and I always love providing this clarity and stuff when it comes to finance, because there's a difference overall between two very, very big terms. In the question, it talked about how to avoid tax in this case. And avoiding tax in this case is actually completely legal. Evading taxes in this case, where you're not paying the tax obligation you owe, that's a crime in that case. That's a really bad thing to do. You have to pay your taxes, guys. I know a lot of people in crypto don't want to say that or don't want to support the idea of paying taxes. Whether you like it or not, it's the reality of the situation. If you make capital gains on something, you're going to owe a tax on it. And capital gains, at least in the United States, it depends across the world. So I just want to provide that context. When talking about avoiding taxes, there are different types of strategies you can employ, but we first need to understand how a taxable event happens. Now, that is going to vary amongst different jurisdictions. But in the United States, it's generally going to be done through capital gains, right? So, when you're utilizing a product like GPIC, if you're a W-2 employee and you've got your income flowing from your employer into your GPIC account, where your pay will, or a portion of your pay will convert into crypto, that income that you're taking in usually is already going to have your taxes deducted as a W-2 on payroll. So the income tax is already paid. So from there, you actually don't owe any taxes in this case until you sell your crypto. So let's say I had earned a portion of my pay in crypto, and in general, the amount of cash I had sent over from my paychecks over the last year was $5,000. And now that original $5,000 investment in conglomeration in total is now worth $20,000. I'm going to owe taxes on the $15,000 of gains that I made if I sell all of that crypto. Now, if I just hold on to it, in this case, then it's not a big deal. So let's go ahead and talk about some of those strategies. How can you start to either defer or lower your tax liability? The first one, at least in the United States, is short-term capital gains versus long-term capital gains. If you sell your crypto after receiving it as a portion of your income, or if you're just generally buying crypto, maybe not even in Digifox, if you sell something within under a year and you make some gains on it in this case, that is short-term capital gains. And no matter what your marital status is, what state you live in, no matter where you are, it's going to be a higher tax obligation than if you would hold the position over a year from when you bought it, right? So let's say I buy something on January 1st of 2021, and then on February 24th of 2022, well over a year, then I'm going to have a lower tax obligation. That's step number one. And I recommend that for long-term investors in this case. Just me personally, it's how I like to do it. But again, I recommend you guys talk to a certified tax advisor, financial advisor, if you need that assistance to make a real decision, right? The second thing that I always keep in mind, and I always recommend people just take a look into, is potentially having retirement accounts. Now, this is something that, again, for the average everyday individual, is something really good to maximize if you want to have a safe retirement. Most people in the US aren't planning for retirement. With a program like an IRA, which is a retirement account, right? An individual retirement account, this will allow you to be able to put up a certain amount of contributions. And I think for most people who are below 50, it's $7,000 per year that you can contribute to your IRA. And we're looking eventually at possibly exploring something like this with GPIC, but there are specified crypto platforms that allow you to put your crypto in, and basically what an IRA does is it defers your tax obligation. So let's say, for example, you've paid your income tax and stuff overall on your paycheck. In this case, it gets subtracted from your W-2 payroll. And once that's been converted into crypto, into an IRA account, it's just going to basically, you can actually trade it and sell it if you want, and do all these different things. And you actually won't incur any taxes that you owe that year. It defers your taxes to when you actually withdraw from the account as a form of income. So instead of capital gains, it should come out in the form of income in this case. And the great reason why, to kind of simplify explaining why it's called tax deferment is you are going to have to pay taxes in the future. That's a given. But it's going to likely be at a lower income rate as you're in retirement, because your income bracket in the United States is going to be lower. Your tax bracket is going to be lower as your income bracket will be lower, right? You're not going to be making your prime year salary in this case. You'll probably be not working a job or working part-time. And that's why an IRA is a really effective product. So those are some ways you can start to defer or mitigate your tax obligation. And there's a lot of great applications out there that can help with that. Your accounting principles for how you measure crypto taxes, LIFO and FIFO. And then I would say last but not least, the one thing that I didn't mention, and it is predominantly in the United States, again, to my knowledge, is in this case, writing capital losses off. Right? Let's say you made a loss on a crypto investment. You were, bought Bitcoin at $10,000 or an average price of $10,000, and you sold it at $6,000, 40% loss, right? Considering that in the United States, you can actually write that off. So in this case, it will lower your yearly obligation. And let's say if I just lost money in this case, I can write off, I think it's about $3,000. It's like a fixed, like a couple $1,000s. And then in the next year, if I make gains, I don't have to pay taxes on the gains I make up to the point of the amount that I lost. So the next year, that loss becomes materialized, and you can write that off from your tax obligation in regards to capital gains.
Awesome, thank you. Now that Cardano has a ERC20 token converter and smart contracts, will Digifox look to add Cardano and staking in the future?
It's a good question. I think, overall for Cardano, Cardano has become a major play. There's a lot of new layer ones popping up, or other blockchain networks in the space that might be complementary or competitive to Ethereum. And we're totally fine integrating them. It does take time to make these integrations work within Digifox, just like it does with any crypto wallet. And the more realistic thing I think we could see in the near term future, as Celsius is bringing about support for Cardano, is allowing for people to open up a Celsius account and be able to deposit their Cardano and earn yield. The yield is not the exact same, but it's relatively close to what you would get staking in this case. So in this case, we think this is probably one of the first major steps we're going to take to getting Cardano and other layer ones into the wallet overall for Digifox. But eventually, we would hope to have it where you can actually own your own Cardano wallet and self-custody it, as well as deposit it in staking pools. So that's something we're definitely exploring. Cardano is on our radar, but it's a stepping process. We want to make sure we can get the quicker and probably more convenient solution out there first before the more complicated one.
Cool. I had a quick clarifying question, or we had something in the chat for a quick clarifying question on taxes. So are taxable gains and losses, do they also occur with swaps?
That's a great question. Yes. So when you guys, the way I always simplify it, of course, again, don't quote me on it. You should definitely talk to a tax attorney in this case, guys. But the simplified way in the United States, in regards to my understanding of the tax code, is anytime you're making a swap from one asset to another, that's an event to realize capital gains or capital losses. So, for example, if you buy a home 10 years ago and you sell it today and it's gone up 3 times in value, you're going to owe taxes on that gain. to the federal government and possibly to the state government. When it comes to capital gains and using like Uniswap, for example, we have Uniswap natively integrated. Let's say you deposited 1,000 USDC in your Digifox Pro wallet and you swap to Uni token or Chainlink, and it doubles in a couple of weeks and you sell it. That is a gain you have to realize and pay taxes on, because you've realized in this case by selling the asset back to dollars. And even if you do, for example, crypto to crypto transactions, so let's say you're not using a stablecoin, let's say you swap from Ethereum to Uniswap, just because you're going from one crypto to another doesn't mean that in this case, you're not going to owe taxes on the trade between ETH to Uni, right? But outside of that as well, if you had bought Ethereum a year ago or some time ago in the past from dollars, and now you're switching to an altcoin, that's another form of realized gains. So again, let me just repeat that. It's anytime you're swapping from dollars to an asset or from one asset to another. There's no way getting around it in that case, unfortunately. Fortunately or unfortunately, right? I guess teach their own on the opinion, right? But overall, and when it comes to your investments in that case, you're going to owe taxes when you're making the trade from one asset to another, when there's any realization of profits. Awesome.
We had another question in the chat, kind of relating to smart contract wallets, wanting to know when new wallets will be activated. And I'm assuming what they mean is if we're ever going to do smart contract wallets again.
Yeah, for sure. That's a great question. Yeah. So though I can't share too many details, guys, we are looking to reintroduce them on layer 2. We want to be very kind of upfront and let people know about that as something to look forward to, because we have, we have a big belief that pro wallets in this case, or smart contract wallets, they're an incredibly powerful tool. They are incredibly powerful at dramatically simplifying the user experience for crypto, whether it's the removal of needing to write down that ugly 12, 24 word seed phrase in this case that no one likes, but is kind of one of the most important elements of crypto in the current wallet infrastructure. And outside of this, well, things like meta transactions, all these things can really add convenience. So you don't need to have ETH in this case to pay for transactions. It would be, the way I think about it is like your bank requesting you have some type of investment in something before you can send a monetary transfer from your bank account to another account. It's a huge friction point, right? So what we want to do is continue to progress the development of pro wallets, add a lot of new unique features in this case, and deploy it on layer 2, where not only the creation of these wallets is much cheaper in this case comparative to where it was on layer 2, on layer 1. As many of you guys know, I was contributing a lot of ETH to support the deployment of pro wallets and stuff. We generated a lot of them for free back in the day. And they were getting really expensive. They were costing like 20, 30, 50 bucks on Ethereum because the network demand was so high on Ethereum. So we'd love to get this on layer 2, where it's not only affordable for us to offer this again completely for free to the user, but also not have atrocious network fees. So you can send payments from one person to another pretty much for free. That's what we're aiming for here. And only if you're doing very high volume of payments, then in this case, we might charge a network fee to make sure in this case that there's no spam, right? So that's something we're exploring, and we're hoping to build all kinds of cool stuff on top of it. But some of those I have to keep to myself. We want to have some surprises for you guys, and we don't want to speak too soon as well. So that's something that we are hoping to do possibly early mid 2022. But for now, we're going to be focusing heavy on GPIC, get paid in crypto. And we're going to be focusing on making sure we can bring, dollar cost averaging to the masses here in this case, as well as generally just bringing crypto to a wider audience.
Cool. Awesome. Thank you for that. That Todd Bailey asked a question. Hi, Nick. If this 4-year cycle peaks around November 2022 instead of Q4 2021, does this mean that this is the last 4-year cycle, because otherwise they'll begin to overlap?
That's a great question. Yeah, so there's actually to the question that Tom asked in this case about the 4-year cycle. And I'll bring up my chart here real quick so you guys can see me kind of go along with my thoughts here. I'm going to go ahead and delete the drawings here. So we're taking a look at the logarithmic chart for Bitcoin here. And there's really 2 ways that you can look at crypto markets when it comes to cycle analysis. And the theory that you actually brought up there in that case, they're both theories, so I'm not trying to derail one or the other. But what Tyler brought up in this case is the 4-year cycle theory and the expanding cycle theory. Now, if you guys watch the Data Dash channel and you've heard me ramble on about this more times than I can count, you guys know that I generally talk and analyze cycles in a way of expanding cycles. So I analyze cycles in the means of looking at bottom to top, right? So we're going to go ahead, actually, we'll dive into the monthly chart here. And what we can see here with the monthly chart, sorry, I'm going to pull up the BLX chart. My apologies. That'll give us more time frame. I actually got it up here on the chart. How wonderful. So we've got a good representation of the expanding cycle theory here when it comes to Bitcoin's chart. That's taking the bottom to the top of the cycle in this case. So the first price point we have here, right, around back here in July of 2010, it was 11 months from bottom to top. And then we can take a look here at October 2011, when we set in the bottom, and the rally to the top here in November 2013. And we've got 25 bars or 25 months as we're looking at the monthly chart. So 11 months in the first cycle. And actually, I think I apologize, actually, guys, I have this thing drawn too much. The actual low came in here on November of 2011. That's why I was a bit confused in the month. So we've got 11 months, 24 months, so an increase of 13 months. And then from this cycle here, we have 35 months from our bottom here in January 2015 here to the peak in December 2017. So an extension of 11 months. So generally speaking, we're seeing each of these cycles is adding about a year in this case, around 11, 13 months. So what we're shooting for here within this cycle is an expectation, and that's where you had mentioned in this case, Tom, that figure of November 2022, adding 12 months from the length of the previous cycle, which would equal 47 months. Right, from our bottom here in December 2018 to our peak, our potential peak here in November 2022. Now, there is no guarantee that we're going to that high in that case of we have marked here in our chart around 200K, or that the top is going to be on November 2022. I don't want you guys to be gun-ho on that, right? But at the same time, I think that this gives us a good framework to work with. So this is a visualization of the expanding cycle theory. To take a step back, though, and talk about the other theory that people are promoting is the idea of generally that these cycles in this case are over 4-year periods of time. So we can see here from the start here in July where Bitcoin was a couple cents to the peak here in November 2013, we can see 40 months in this case. So roughly speaking, about 4 years in this case, right? And I think actually the official 4-year cycle comes in here towards the bear market, right? So it's generally from the open here to the bottom, right? You have the entire rally, the bear market, it's a 4-year time period, right? And then you have what many people see as the second 4-year cycle from here in January 2015, right? Going over here towards the bear market here. Right, you can see it's about, if you take a look at the length here, ignore really like the appreciation levels here because the height was all the way here. But basically from here in January 2015 here towards January 2019, 48 months, right? So now many people think that we're on par for another 4-year cycle, right? And the thing about that in that viewpoint is, look, I think it's an interesting perspective that to each their own. But I would say that the problem with the 4-year cycle, and what I always come back to is it's taking into account these 4-year intervals in this case, right? That basically take you from when the new cycle starts to this point here, the new low point, right? What I really care about when I'm an investor, when I'm doing cycle analysis, is I want to buy at the lowest point possible and take profits, right, at the highest peak possible, right? And put aside, honestly, I know a lot of people, for example, like we love crypto at the end of the day. I think crypto as an asset class is very empowering. I think it's great, but I'm an investor in this case. And if I'm swing trading the market, which means that I'm buying low and selling high over a long period of time, I want to sell at the highest point possible, roughly around the higher range. So at these market cycle peaks, we can see here on our charts, right? I want to sell roughly around this range. And I also would like to buy at these ranges, right? Now, you don't really have to worry about this if you're dollar cost averaging. It's a much more simpler approach. But broadly speaking, if this is really your target, to get out of the market here and buy during the absolute blood of the market. Now, you can almost reverse these colors if you think about green being buying, right? You want to buy down here at these lows and sell at these levels, right? If that's our goal, we should probably analyze cycles in this way, right? In order to spot when bear markets are going to happen. So what I do is I do the 4-year cycle, excuse me, not the 4-year cycle, I do the opposite. I do the expanding cycle theory, right? 13-month increase, bottom to the top, 11-month increase. And if we're following history and we meet right in the middle between the increase of both of the previous cycles, that would lead us here towards November of 2022 at some higher price range for Bitcoin, right? And who knows what that amount is going to be. I think the optimistic target that I hold is around 200K, but it's not going to happen tomorrow, right? So again, this is not financial advice. It's just how I go about viewing the crypto market personally. And just to actually make sure I answer it properly, I know I've rambled on a bit, but can you rephrase the last point of Tom's question, just so I make sure I get it right?
Yeah, so Todd says, does that mean this is the last 4-year cycle because they will begin to overlap?
Yeah, so to that point in this case, you could continue to have 4-year cycles. The thing is that November 2022 high comes from the idea of expanding cycles, not the 4-year cycle. So I know it might be getting a bit complex, but if you guys believe in this case and the time period of, for example, 4-year cycles within Bitcoin, right? No matter what time frame you're starting from, then I'll give an example here, right? So if you start from the lows here, and I'm sorry, we're looking at the monthly chart here, right? So 48 weeks, bottom, cycle top, new bottom. You could still project that we've got another 4-year cycle coming, right? And this would lead you overall to estimating we're going to set not a new high, but a new bottom somewhere here in January 2023, right? So you can still and just to kind of analyze what that would look like, that would probably incite that we're at the top of the market or we're about to set a top soon. And then price is going to drag down to this range. And then we start to make higher lows and higher highs, price starts to move higher, and we start the next 4-year cycle, right? So anyways, I hope that explains that there. Again, I'm a believer in expanding cycles. It's an easier way to analyze markets. And I think that markets are going to be less volatile to the upside and the downside as we grow as a larger asset class. So hopefully that provides some explanation there to your question, Tom.
Perfect. Thanks. The next question is, what are your thoughts on Polygon, or the Matic or Matic token?
Yeah, so overall, I've honestly kind of grown, overall I was never negative on Matic or Polygon as a network. We followed Matic for a long time, or Polygon back when it was Matic as a project. Overall, the Polygon network is really interesting. It is served as the kind of de facto layer 2 in the crypto space, even though technically at its current state, it's a side chain. At the same time, Polygon, has been able to offset a lot of traffic and open up, the DeFi and crypto space as a whole and all the services within it to an average everyday user in this case, who doesn't want to pay, $5, $10, $20, $30, $40, $50 network fees to do certain types of activities. So in many ways, I think it's been a huge compliment to the Ethereum ecosystem. And there's a lot of projects and liquidity on top of Polygon. That being said, the one thing I really want to see long-term is Polygon's introduction of optimistic rollups. I think overall that Polygon is relatively secure as a network. It's got great user adoption. And again, overall is probably one of the most premier sidechain or layer 2 players in the space. But I would love to see the progressive roadmap of Polygon overall. But I think, long story short, I think it's a cool network. I can't per se talk about the token price more specifically, but I can definitely talk about, the fundamental development that's on there. It seems like the number of active addresses is picking up. Network traffic is staying relatively consistent. So I'm eager to see how it can scale long term. And also having a slightly higher TPS than Ethereum is really nice as well. So yeah, nothing negative to say. More than anything, I'm interested to see how it goes. And it's one of many different networks we're looking at as a potential layer 2 or sidechain solution for the new wave of smart contract wallets or Digifox Pro accounts. But we're not confirmed to use Polygon by any means.
Awesome, thank you. So Jape, I hope I pronounced it right. Jeff Kramer. He has like a couple of questions. One of them seems like kind of like a rebuttal to your 4-year cycle answer. So I'll answer that one first because it was what you just talked about like before. It says, but the 4-year cycle is driven by the scarcity caused by the halving, or the like halving, like going in half.
Yeah.
Lengthening cycle theory will overlap with that halving once.
Yeah. No, that's a very good question. Yeah. So, or more of a point in this case to kind of dive into. So this is a very good point that the halving events are programmed in to happen about every 4 years, right? You might have a slight, a couple of hours of difference from when people project it and stuff, depending on how quick blocks are being produced on the Bitcoin blockchain. But when you get to a certain block height or some time period from when the halving event happens, it's generally about 4 years, the new Bitcoin being issued on the market drops in half. Right. So for example, just for pure simplicity's sake, if the block reward in this case was 10 Bitcoin per block, it would drop down to 5 Bitcoin per block that miners get rewarded. And that basically, effectively speaking, reduces the amount of new supply on the market that can be sold, because miners usually are running in a business format. They mine Bitcoin, they have an underlying cost to do so, and they sell the Bitcoin in order to fund their mining operations. It's not always true. Some people hold the Bitcoin and finance their expenses elsewhere. But this is generally what causes these major breakouts here in price. It's a big effect in this case towards helping to basically bring prices higher. So I understand the point that the individual brought up in this case. One of the things I would like to say is kind of a, not per se a devil's advocate or just kind of challenge, is that these halving events overall, they will start to have less and less impact in the sense of Bitcoin weight. So that's one thing to consider. But outside of that, I just generally think that we're going to have less severe bear markets and also less severe rallies. So what you can see, no matter if you use the 4-year cycle, or you use expanding cycles, you can generally see here that the momentum of Bitcoin as an asset, albeit it's still for, I think, a very long time going to outpace any other asset class on a general annualized basis, right? Some years it might be down, but generally speaking, Bitcoin, if you take this kind of midpoint line here, right, Bitcoin's chart, you can see here that even as the momentum is still great, as we're looking at the logarithmic chart, the momentum is slowing, right? And we could see that again when we did the expanding cycles, right? This one here was a nearly 50,000% return. Here to here, we had around the same kind of percentage return here. But as we look at the last cycle, we had dramatically lower percentage return, right? So again, important thing here to note is that we're seeing a decline in returns over time, and that's given in any market. Bitcoin as an asset class probably, isn't going to go towards $100 trillion market cap in this cycle and the next cycle, maybe 3 or 4 cycles out if it really becomes this major store of value, right? And if there's high levels of inflation. So generally the returns of any market are going to decay over time. And what I think you're going to get as the cycles potentially are expanding, right, is you're going to get, as I mentioned, less severe bear markets. So we could just, for example, again, don't take this at face value, right? So we maybe continue to climb here, and we set in our new highs here in this case, roughly speaking, from bottom to top around, let me get it here drawn on the chart. We're for 2022. Make sure, let me move my zoom thing. I was trying to make sure I don't have the thing too far off. There we go. So let's say we go to 200K. Right. And then what we're going to have probably as we move along this line, we enter into a bear market, prices start to go down, right? Start to cool off and enter into a bear market for Bitcoin, right? The idea here, though, is that no matter when those halving events happen, whether they're earlier or later, they're going to start to change the supply schedule. And we're going to generally be getting, in this case, longer cycles, right? But outside of this, well, cycles that have weaker bear markets and weaker rallies. So that volatility nature of crypto is going to start to decay. But anyways, I hope that can make sense. It's kind of hard to visualize because we really can't see it until it plays out. But overall, as we've talked about, we just thought about it. We just actually got featured in an article on Cointelegraph that you guys can find on our Twitter page, where I talked about how people always, people are challenging Bitcoin's narrative as a store of value, which to me, it's a bit crazy, but I think it comes from this one misconception, which is that people see, well, the halving event just launched today. Isn't Bitcoin's price just going to immediately go up? And that's not usually the case. The reason why is because it takes not only time for that supply adjustment, even though it hits the market immediately, it takes some time to really have a long lasting effect on Bitcoin to kick off that initial cycle, to have that supply reduction day by day by day by day after it goes into effect. And then also, as prices appreciate, it's really going to be dependent on whether or not buyers are coming into the market. Are more people buying Bitcoin than selling Bitcoin? That will generally determine the direction of price. So again, I know I'm rambling on a little bit here, but one of the key points here to keep in mind when it comes to Bitcoin as an asset is that overall the returns are going to decay over time. And I think the halving, in this case, the reduction of new Bitcoin hitting the market comparative to the overall supply, is going to be more and more minimal. So hopefully that makes good sense in this case. We're already at pretty low inflation levels for Bitcoin. Reducing and introducing the new halving event isn't going to cause the same supply shock it did back here or back here or back here. So hopefully that makes sense.
Awesome. Yeah, he actually just messaged in and said, thank you for the answer. Agree that the volatility will decline in the future will answer the argument of lengthening versus more strict 4-year cycle driven by supply and demand.
Exactly. Yeah. And just to close on that, I appreciate the kind remarks. It's going to be interesting to see how things play out. We'll see if November 22 or somewhere around there's the top. If it doesn't play out and we actually follow much more the 4-year cycle, then I will rightfully say I was wrong on that one. I always keep open to it. We have a low amount of data to work with, but it's best to work with what we got. So.
Awesome. Perfect. Cool. So we have, what was it? Yeah, Jabe asked another question a while ago that I skipped over because this other one was more relevant to what we were talking about. He says, will the coming Ethermint bridge, Cosmos to Ethereum, help with integrating the Cosmos ecosystem, or will you be able to integrate Cosmos regardless? And that, I'm going to let you answer that.
Yeah. So I'm as much as I'm knowledgeable on Cosmos, I don't have an intricate knowledge of how difficult it would be for us to integrate it into the wallet. Again, with the same remark that we made earlier about Cardano, our first focus, guys, overall with Digifox as an application, especially with the launch of Get Paid in Cryptos, we want to dramatically simplify investing in cryptocurrencies. So for example, even though I actually don't know off the top of my head if Celsius currently supports Cosmos. I think they do, or if not, they're possibly close to doing it. I don't know. But generally speaking, if Celsius supports Cosmos, we want to give you a home in that case where you can own your assets and earn interest on it, right? Basically, hopefully, maybe in the future, Atom in this case could be a currency we have for GPIC. We want to list a ton of different currencies in the coming months. But generally speaking, that's our first thing. The second one, though, as you mentioned, possibly is having a Cosmos wallet within Digifox and maybe being able to bridge between chains in this case. And if that's what you're referring to, it's something I'm not knowledgeable enough on just yet. I do know a good amount about Cosmos, but I haven't looked at the SDK. I haven't looked it over with the engineering team. So we'd have to do a deeper dive on that. But I personally, in this case, stepping outside of Digifox, I really think Cosmos is a cool blockchain. Their developer tools are some of the best in the space from what I've seen. Tendermint consensus is really exciting. And even one of the projects that I've advised with is building on top, almost a form of layer 2 solution for enterprise companies on top of Cosmos's SDK. So yeah, like I said, can't say anything negative about it, but can't give a direct answer just yet because we haven't explored it enough yet to see how long it would take.
Cool. Awesome. Thank you. Bucky asked a really good question. What are your thoughts on potential US regulations on DeFi platforms that allow you to earn interest? Because they seem to be in the beginning stages of cracking down on this. Yeah. The banks suck for earning.
Well, I understand the frustration there can be in the crypto space. I think there was a recent viral thing we even tweeted and joked about it where Gary Gensler was, talking about if you just simply say, and he, for those who need context, he's the SEC chairman, basically he'd come out and said, if you just put away savings in this case early on in your life and you earn 8%, you can have X amount of money, $5 a week in this case, you could have X amount. I think it's like $180 something thousand. by, by the time you're like 50, 60 or towards retirement, right? And that blew up in this case because of all that's been going on within the crypto space when it comes to the SEC making comments about how they, for example, see Coinbase's earn product in this case, where you can earn about 4% on USDC as a security. So this is all a debate about securities law on the surface, right? Now, look, at the end of the day, guys, I want to make something very clear. And this is not just out of respect to regulators in this case, but it is the reality of the nature of being any kind of company. I know everyone wants someone to be a rebellious person shouting to the roof that, oh, we don't want to listen to regulators, or I don't think my crypto should be taxed. Look, to be honest, guys, rules are rules in this case. We have to follow these rules as a company. It's why Celsius, for example, within Digifox has to ask for KYC. Identity verification is required. So, and also, Celsius, we utilize Celsius because they have banking licenses. They have the ability to custody assets, right? So these are the rules and parameters we have to work with as a company in this case. So I'm not going to go in any means against what the SEC is saying in this case. We want to do our best as a company to follow those rules, whether it be the SEC, the CFTC, any major regulator out there in the market. But when it comes to my opinion in this case, and I'm very candid and vocal about it, look, I really do believe that most regulators have good intentions. I think Gary Gensler and a lot of other regulators want to see this space be able to operate. I don't think that they're merely trying to censor the entire DeFi movement for the auspices of major banks and financial players, right? I'm going to go ahead and maintain a positive nature with where their intentions are. That being said, one of the biggest issues that I see is that the SEC has its priorities on yield accounts in this case, where you're allowing people to finally, for the first time in over 50 years, right? So it seems to be about 40 years since back in the 80s, where you could get 8-10% on your savings. Bank accounts today are paying 0.05%, 5/100ths of a percentage point in average on interest. And in Gary Gensler's example, I'm with him. We want to get people saving. The problem is you can't get any yield on your savings. Compound interest is, completely irrelevant if you're making 0.05% interest every year. Whereas Coinbase and so many companies like Digifox are offering these interest-bearing products. Right now, again, at the end of the day, Coinbase and other exchanges, look, yeah, they're offering similar services to us, but I wish Coinbase all the best. I wish Brian Armstrong and the team over there the best possible. And I think they should have the ability to go out and innovate. And the problem that I see here with the SEC's argument is that they're generally claiming that stable coins, in this case, USDC, USD Tether, that they are somehow securities. They fit under the definition of where the SEC has jurisdiction to enforce actions upon, and that is issuing securities. So, for example, owning stock in this case, like a stock in a company, that is a clear security in this case where the SEC has jurisdiction to regulate over because there's an intent to make profit for investing capital. It's one of the major things that lead into what's known as the Howey test. When I take a look at USDC, I gotta say, whether it be a stable coin or putting that stable coin into an interest-bearing account or putting Bitcoin into an interest-bearing account, you may be looking to make a return, right, on your capital because you are technically putting it into the platform and lending it like you would through a traditional bank. But it is not a contract of investment. So it's much more, in my opinion, like putting deposits in a bank, which is not deemed as a security. The SEC doesn't have jurisdiction over that, rather than some type of investment contract, right? Where, for example, it would be like investing in a stock or investing in a small business. So that's my general thesis on it. It's where I find a bit of frustration with this narrative. And I think more than anything, there's been some positive remarks recently from the SEC about, opening up the conversation, possibly, for example, Hester Pierce, who's been a very big crypto advocate, has talked about a safe harbor policy, allowing projects to launch tokens and do unique types of things within crypto without issuing securities enforcement until we refine the law in this case. And I think those are really good approaches. So a long ramble styled response to it, but it's a big topic. So again, we're gonna wait and see what happens overall with the overall enforcement and the general practice and the definitions in this case of these earned products. But so far, in this case, we again believe that it's okay to operate these services. And we'll see in this case how things go over the preceding months and what we need to do to follow with those preceding regulations.
Yeah, and we have more videos. Like if anyone is not sure what we were talking about and they were like wondering what Celsius is. Sorry, my voice is horrible today. Celsius is, or what compound is. We have those videos on our YouTube channel. So you're on it right now. So if you click on them, you can find it. Cool. And then Corey says, "Hi Nick, curious on your thoughts on OMG/Boba network and what the future holds for Digifox investors." And then if you want to like hold off on the investor part, we have an investor question right after this, but I'll
okay, very cool. Yeah, that's a great question. It's similar in nature to Polygon. I think, Boba network, which is the new layer 2 solution, or from my understanding, the implementation of optimistic rollups for the Omisego network. I think overall it's a very, very interesting product. Overall, again, like I'm interested in a basket of layer 2. There's Hermes, and there's all types of different ones coming up that are starting to potentially compete with Polygon and an implementation of optimistic rollups versus being a side chain. That being said, I don't have really any preferential treatment towards either of them. I think the big thing that Omisego had, or now it's instead of Omisego, it's OMG network. That OMG, the benefit that OMG has in this case, and Boba will have, is the network of users who hold OMG tokens in this case. And I think, again, at the end of the day, network effect in this case, alongside token holders in this case, is very, very important in scaling things long term. And OMG has been around for a very long time. They've went through, I think, some different team adjustments. I think there's a new team within the project now, but it's a long-standing project in the space. So I think that's a huge added benefit to it. Yeah, I guess we could go on to the investor question as well.
Cool, perfect. So what does the future hold for Digifox investors? And I'm going to try to say this username, Punavan Zanton. I think I got it. Hi, Hope and Nicholas. A WeFunder backer here. I'm curious how healthy the business goes. And do you plan to make a yearly report available, for example? And then he also says, would you consider another round of financing to accelerate development of new features, or is that not necessary nor making a difference in the speed of the progress? So there's a lot kind of rolled into one, basically like
a whole summary of what's the state of things, where are we heading?
What's going on, right, with Digifox? What's in store for investors? Are we going to do another raise? A lot of things like that. So.
Very cool. No, I think it's a great question. If you guys give me a lot of questions, I'm going to ramble just as long. So I think, to give the status of things, so I think we'll first talk about where we're at and then where we're heading. So where we're at right now, in regards to capital overall, guys, I want to make something very clear here, guys, in regards to capital we raise, or for example, planning for the next raise. No matter where the business is in this case, I'm always going to do the best I can to support Digifox as a company. So I want you guys to have that kind of peace of mind when it comes to the company. Overall, in regards to the company itself, we've made some good progress. We got over 30,000 downloads of the application, about $10 million in assets under management. There's a lot of traction within Digifox for a kind of relatively small crypto startup. And things, again, when you get to 10 million, and AUM with the market growing as well as the users coming on, it's very easy to start seeing that compounding growth. Albeit we're not at that state right now. In this case, we think GPIC is going to be that next lever to really take us higher as DeFi has been a bit cooled down over the past couple of months. So as we've made that project pivot in this case, we're really expecting to continue seeing numbers grow in the company, the health of the company, even after this kind of wave of technical debt that we had with the Digifox Pro wallets and the account recovery in this case. That was a difficult situation for us, but it's typical. Most startups are going to go through a 6 to 9 month wave of technical debt as a company, and luckily we were able to get through it. We stuck to our guns. We wanted to do things right by the users, and nowadays the application, it just simply works. There's very, very few rare edge cases in this case, so we're really happy we were able to resolve that. That's an important thing, going forward, even if we want to do GPIC, right? So that's the state of the company. Company is doing well, in my opinion. think that we're continuing to progress. GPIC is coming along well. We're hoping to possibly have a invitation beta in the near future. So if there's any of you who are interested in participating, you can reach out to the client success team. We'll give you guys a early warning for that beta coming out in that case, because you guys are here on the webinar. And then the second question is about like, where are we going in this case? So you guys know, obviously we have GPIC, but the question is about doing another funding round and producing financials. So one thing we are exploring is potentially doing another equity crowdfunding. Again, we haven't made any official announcement of it yet. We're not 100% certain. We're looking at our options. But for me, as you guys know, why we did the equity crowdfunding in the first place is I love giving everyone an equal opportunity to participate early on in a company. I hated for years how, I wanted to invest in companies like Uber and all these great startups. And unfortunately, until 2015, 2016, when the SEC had changed the rule to allow for equity crowdfunding, I'd have to buy Uber at a $50 billion valuation. The earliest I could buy it is at a $50 billion valuation at IPO. Not very fun, right? Not much room for return. So, yeah, we are definitely considering doing another equity crowdfunding, probably through WeFunder if we go about pursuing it. And we will let you guys know once that launches. We're very, very excited for it. We had great success last time. We raised $650,000 from nearly 1,000 unique investors across the world. And it's not just US investors. We had people from every corner of the world, people who had watched the channel, people who didn't know me. We were just incredibly surprised by the turnout. So yes, definitely that is something we are looking forward to, and we will keep you guys in the loop if we decide to launch that. But in regards to the financials, if we do another raise for the amount of capital we would need to raise through an equity crowdfunding, we're going to have to produce a financial audit of the 2020 financials and 2019 financials. So in that case, you guys will be able to see up until 2022 how the books looked in that case and stuff. And just for time's sake, that's probably what we're going to settle on in this case, providing that kind of transparency in the financials. Until we're a larger company, my main job is just to get out there and keep building the business. It's not per se for a lack of transparency. So again, in that case, yes, there will be some financial reporting once we, if and when we do a secondary crowdfunding.
Awesome, thank you. Last question that we have so far in chat is from Janice, I think. And I don't know if you pronounce this Evergrande or Evergrand.
Oh no, I think as Americans we'll think Evergrande by thinking about Starbucks terms.
Yeah. So how will Evergrande affect the crypto space? That is their question.
That's a great question. Yeah. So Evergrand, just for context sake, for those who may not know, is a major real estate developer. It's the second largest real estate developer in China. I think, from my knowledge, they manage and own, I think 2.5% of the properties, all the properties in China. So think about how big China is. It might not sound like a lot. It's like single digits, but for one company to own or produce this amount of the country's real estate is a huge deal. Now, that wouldn't be so much of a problem in this case to have a large company do this, but the problem with Evergrande as a company is that basically speaking, they borrowed way too much capital, from my understanding. So again, if you guys want to correct me in the chat or add some feedback to my points, feel free to. My understanding about Evergrande is that they borrowed way too much money from investors, built too many properties, and unfortunately are not only not able to repay the loans in this case, they're not even able to repay the interest on top of their loans. So this is what would be known and what's usually labeled in the United States as a zombie company. These are companies that, for what they've borrowed and what they've spent, they can nowhere near pay back the money that they owe in this case. And it's usually when they can't pay the interest on the debt. So that's a very worrying sign. That's a sign of imminent bankruptcy, imminent, financial class action lawsuits, all types of different things that could come in, right? Now, for a startup who, in this case, burns through cash and maybe never builds a successful business and collapses, not a big deal, right? For an average startup, when it comes to the broad economy, there's startups and businesses that fail all the time. But when you have the largest or second largest property developer in China not being able to pay back the interest on its debt, that's a major issue. Now, just for some context, why is it that Evergrande can't pay back the interest on its debt? Well, the reason why is not only that it borrowed a lot and was building a lot of properties in China, but that 25%, a whopping 25% of the real estate that they own is vacant. This means that no one is living in there. And that means with no one living there, there's no rent. There's no a mortgage in this case, buying the properties. So you have 25% of your portfolio that's generally sitting there, right? And that, I think, from my understanding, is really the dead weight in this case, that you haven't materialized either selling the property or you're not yielding any type of rental income. And again, that's with my limited knowledge of the real estate market. It's definitely not my major domain, but it's where my understanding is on the case from what I've read and what I understand. So yeah, I mean, they have around $300 billion of debt owed to borrowers, or sorry, to lenders. I can say that they're never going to pay it all back, but what could happen in this case, and the two solutions that would make it where crypto really doesn't get affected, is if the Chinese government were to, for example, literally through the people's, the Central Bank of China in this case, go through and print $300 billion worth of yuan, in this case, the Chinese yuan, pay down those debts. They're probably not going to do that in force, but they'll probably do it to some degree. And then there's also, other financiers who will lend to Evergrand in this case, who might possibly be willing to take that risky bet and help them cover their short-term obligations, basically refinancing the debt and be able to start to restructure how their business operates, right? Maybe selling some of their properties and covering cash to pay off their debt obligations. Who knows, right? There's all kinds of different solutions that can come about. But I will say that where my expertise doesn't come in is really knowing where the intricacies really go to. So I think that it's going to generally get settled. China can't afford it. And the global economy can't afford it. So like with all these things, monetary policy is likely going to come in and help solve the solution.
Awesome. Cool. Thank you. We had a question come in while you were talking from Corey again. It says, Hope/Nick, thanks for the answer. As a WeFunder investor, it's exciting to hear the updates. And any intention of bringing back the Discord or opening a Telegram for the community to discuss? And I thought about how to answer this, and it's mostly just we had a lot of plans. I think I originally built the Discord, or set it up, and then Nick helped a lot with because he had done it before, so he helped out with that. But we had a lot of plans for what we wanted to do with it. We had different initiatives that we wanted to put in place, and then we just never had the resources or time to do it. And then when we went through that season of technical debt, it was we had even less time to do that. Exactly. And it turned into just something that was just there, and it didn't look very professional on our end to have that there, just because we weren't able to monitor it as much as we wanted to, and we weren't able to we didn't do a very good job of recruiting moderators for it. So it's not to say we'll never have one in the future ever again. Just we don't have immediate plans to open another Discord or a Telegram or a place like that in the immediate future. For now, if you guys wanted to, these events that we do, these webinars, these Q&As or the AMAs, those are kind of our community events where you can get together. We can do these chats, or we can do Q&As, which is really nice. So those have always been phenomenal. Otherwise, you can follow us on social media. You can banter back and forth on Twitter or Instagram. Those are our big ones. Obviously, we have a Facebook and a LinkedIn as well. So you can definitely connect with other community members there. Or if you have any specific questions, our support team is always open to chat. So even if we're offline, we'll get back to you right away as soon as we're back online. And we actually have a lot of really awesome diehard client success champions that chat with people on the weekends. So if you have questions, you can send them there. If you have any specific questions, to digifox.finance, that's where the chat is. This guy says he agrees that it got quite toxic and reopening it later would be nice. Yeah, so we'll think about it. It's not like we're not open to ever doing it again, but I don't know if you have to add to that, Nick. But.
Yeah, I was just gonna add, guys, we're again, the reason we opened up the Discord is we're very big on community. It's just that we didn't have proper moderation, which it doesn't matter what your server's purpose is. If you don't have good moderators in this case, you have to have some kind of quality control and stuff when it comes to any type of social community, in this case online. So we want to make sure we get a good community of moderators when we do launch that Discord server or Telegram once more, whatever service we utilize. I think those are probably one of the two candidates. And we want to make sure we get many of you out there who are big fans of what we're doing, who want to help people in this case on there as moderators. And outside of that as well, we want to do it when we have a more active, like a larger user base. The Discord was good in a lot of ways, but we didn't have a major amount of users on there. So sometimes it get a little bit quiet. So we're hoping to do it once we've got a lot more momentum, we've got more people coming on. We'll have a lot of new beginners in the space as well, who could use the guidance of other fellow members in the community as just a place to start or get educated. So we're excited for it. Again, I'll say on though there's no promises, we are hoping to have it once more and stuff for you guys. So so that's something we're looking forward to.
And just a quick note, we are past time, but we have a few more questions we can stick around for if you're good for it, Nick.
Let's do it.
So yeah, this is being live streamed on YouTube, so it's being recorded. So for anybody who was wondering that, but Eugene is going to ask a few more questions if anybody wants to stick around, but I just wanted to say, yes, we are over time, but we'll stick around for a few more minutes.
Awesome.
Perfect. Thanks so much. Why do the values of altcoins follow Ethereum so closely?
That's a great question. That's another one where I will, yet again, just to visualize it a bit more, I'll bring up the screen here. So the thing I always talk about with people, and I usually actually do this through like visualizing coin market cap. Actually, right now, this is actually a great example here. It's not always the case, right? But, generally speaking, as you go to the list here on CoinMarketCap, what's really interesting is that you go from Bitcoin to Ethereum to Cardano. Notice how, as the currency and market cap, not per se price, but market cap or total value decreases, the decline generally decreases as well. And vice versa, the smaller the play in this case versus the large, sorry, I'll do that again. If you're in an upward move in the market, right, in this case, generally speaking, not always, generally speaking, you'll have higher returns. Cardano is much more likely probably to double in value in this case than Bitcoin is, as a $67 billion cryptocurrency versus an $814 billion, which Bitcoin is, right? So you have basically markets of scale, right? And this can help to understand, in this case, a very broad concept here that the markets generally move together because of capital flows. So when people first invest in crypto markets, they're usually going to invest in Bitcoin, right? And historically speaking, investors make a return to some degree, right? They buy Bitcoin, maybe let's say at $37,000 back here during July. Maybe they sell it here at $46,000. So they make some kind of return here, right? And once you get more comfortable with crypto and you start learning about alternative options in the market, it's in my mindset, of the way I explain it, is it's like going from investing solely in, General Electric to going into investing into Apple, and then going into invest in companies like Nvidia, and you start going into smaller market capitalization ranges, more high risk companies doing alternative things, ones that are younger than the large companies, in this case like Apple, right? And people start to kind of delve into these other plays and take the returns they've made in previous cryptos they've held into smaller cap cryptocurrencies. So if we're thinking about it in like a really like surface level viewpoint, imagine if you could visualize the market. Capital is flowing in from cash, whether it be dollars, euros, British pounds, Chinese yuan, Japanese yen, Korean, right? All these different types of currencies. And they're going into the core big assets, in this case, Bitcoin, Ethereum, and a lot of the assets we offer get paid in crypto. And then they start to trickle into some of the other plays in the market. And that's what leads, when Ethereum is getting traction, this is kind of a precursor sign in this case that altcoins are going to generally be going up as well to some degree. Doesn't mean that they'll outpace Ethereum, doesn't mean that they're going to underperform, but generally they're going to follow on an uptrend with Ethereum and Bitcoin performing well. And it's why when we enter into bear markets, you're rarely ever going to find, it's usually that we get one last exhausted altcoin rally at the end of the cycle, like we did back here when Bitcoin was topping out in 2017, January was a great period of time for altcoins. And it proves to our thesis, once Bitcoin is making euphoric returns, then the liquidity cycles and goes into altcoins because people are basically trying to capture all these opportunities. It's the max point of euphoria and excitement and risk taking. But as Bitcoin generally goes down 80-something% in a bear market, right? Like we see here, from this date range, January 2018 to December 2018, take a look at altcoin dominance, and you can find this on TradingView by typing 100 minus BTC.D. You can see during that same exact time period, from January of 2018, right, we dropped from around 63% market dominance, so sorry, a high of 64.59%, downward. I think it was over, let's see here, over here, yes, to 40% market down. Sorry, I have a logarithmic chart, so you can't see it too well, down to this range. And it continued to bleed as Bitcoin set in its bottom. So I'll show a good visualization here of comparing it. So we can pull up, compare Bitcoin USD to a new pane below. So this is Bitcoin's chart here. And you can see that as Bitcoin generally rose, in this case on price, altcoin dominance followed, right? So we have the peak here in December 2017. The peak was really around, if we viewed it on a shorter term time frame, it's more around 20K. So it's a little bit higher than this. But you can see that altcoins only started to move in the later phases as Bitcoin was already starting to garner some traction, right? As Bitcoin was already starting to make an uptrend. And then also when Bitcoin enters into a bear market, altcoins get hit, and they also usually get hit further, at least according to what we have to work with the history, when Bitcoin makes a rebound, right? Because overall altcoin dominance, even though altcoins might be moving up with Bitcoin, Bitcoin is appreciating faster and therefore is garnering more ownership of the market in this case. We could actually probably something better to look at here would be total 2, which is the altcoin total market cap. And we can see here that even as we go towards the lows, it starts moving up with Bitcoin, right? So it doesn't mean that if Bitcoin's going up at the start, altcoins can't move higher as well, but they're not going to be moving as fast because people need to be making those returns in Bitcoin, the more safer assets, and it starts to trickle down into the altcoin market from Ethereum all the way down to a variety of alternative cryptocurrencies. So hopefully that explains it. Again, it's not financial advice by any means, because that's just my interpretation of how the markets work overall.
Okay, another question that isn't financial advice. Should I invest in different cryptocurrencies or should I stick with just one over time?
That's another good point. You know, guys, I think that there's a really good fine line between having no diversification, which I think is really bad. Like if your eggs, all your eggs are in one basket, that usually never pays out good. It pays out good for a few select investors, and it can hit a lot of other investors. And then there's the other end of the stick, which is that I've met some people before, and with all due respect to in this case, I had a person I met actually at a meetup we did for the Data Dash channel, someone who had, I think 100, 200 different cryptocurrencies that they invested in. So they had like everything owning, like, I think they maybe had like 5% in Bitcoin, and then the rest was like fragments of a percentage in this case per altcoin. And look, there's a lot of research behind in this concept. There's even a book written about it called the 100 bagger concept of investing, which is that you put a lot of small investments in new ideas and stuff. And look, if you're getting into, if you know how to spot good plays, you know, you've had a proven track record in this case, and you can get early in investments. That's an important thing. Catching things early in the market. That's the most important when it comes to crypto. You know, maybe that could work for you. But I would say for the average investor in this case, if you're buying on spot market exchanges like Digifox, who utilizes fiat on-ramp partners, or you're buying it through Coinbase or Binance, whatever exchange you use, then in that case, it's about having a good moderate degree of diversification to protect yourself, not going too far. I'm thinking, you know, usually around 5 to 7 investments should make up the vast majority of your portfolio at max, right? At a minimum, like 3 investments generally. And with that, you want to more focus than anything on getting in generally at the right time, or dollar cost averaging into an asset that you know still has multiple levels of growth for it as an asset in regards to its price. So that's what I would say I personally follow in this case. I don't have 1,000 different cryptocurrencies, but I also am not putting all my eggs in one basket. So hopefully that provides some good context.
Yeah, that's a great like segue into get paid in crypto too. That's like kind of like the huge reason why we're launching this feature. So there's a lot of people that it's really overwhelming, honestly, when you think about all the different options for investing. And offering get paid in crypto in a way that just kind of dollar cost average into the market over time is one of the, arguably and most, I feel like, popular way to start investing. Obviously, like we don't offer financial advice. You should obviously do whatever, you should seek out financial advice from a financial advisor and do what they, take advice from there. But that's a huge reason why we're launching this feature, is because it's a simple way for new people to get involved in the crypto space. So.
Exactly. No, yeah, Hope hit the nail on the head. We're going to offer Bitcoin, Ethereum, and Litecoin at the start. And we hope to not only eventually have other coins that you guys will be able to invest in, but also, there's all kinds of improvements. So I don't want to spoil too much, but we are definitely focused on giving you that vehicle, if you want, overall, or that means within the application to be able to have diversity in your portfolio. And so we're very excited about it, but we'll have more updates as things progress, and a lot of other feature enhancements that we want to do after our first iteration of Get Paid in Crypto.
Good. That was all that I had for you. Thanks so much, Nick and Hope.
Awesome.
Thanks, Eugene. Yeah, so all right, that about wraps it up. We went a little over time, but I think we had a lot of fun, so it was all right. We had a lot of great questions from the community, either like in advance or in the live chat. So super cool to see all you guys joining. I know it's been a while, so it was great to get back into the swing of things for webinars. Hopefully we'll do another one soon here in the future. And yeah, if you have any extra questions, things you think of later that we didn't get to, feel free to drop us a message in our in-app support system or at digifox.finance. But otherwise, thank you so much, Eugene and Nick, to do this, for being here. And we will see you guys all in the next webinar.
Awesome, guys. It was nice seeing you all. Thank you guys for the great questions. Take care.
Take care, guys.